Didn't fade that good enough. But anyways, yeah, welcome everyone. This is another Profit Makers meetup with some new people to options. I'm Leon Gabon. So yeah, we're basically going to talk about what are options, what are calls, what are puts, what is options trading, what's a risky strategy to do with high reward, and what's a conservative strategy to do with lesser but more consistent reward. And then we're going to go into some examples. So let me go ahead and share my screen here. Oops. I'll share the entire screen. And oh, not this yet. Okay. So basically, options are a derivative. They're a derivative contract. So stocks, everyone gets stocks. You can buy a whole stock, which represents a share in a company, or you can buy a fractional share of that stock, like 1% of that one share, or 10% of one share. And that you just hold it, and that eventually, hopefully, goes up in value over the long term. And some stocks will pay you dividends and whatnot. Options, on the other hand, are derivatives. So how they work are there's only two. So there's calls if you're bullish, and then there's puts if you're bearish. So when you buy a call option contract, each option represents 100 shares. Let me do it. One option, 100 shares. So that's an important number to remember. So when you buy a call option, it gives you the option to buy the shares, 100 shares at your strike price. So for example, we take a company that's trading at $30, and you buy a call at $35, and the stock price goes to $50. Now, on the day that your contract expires, because all these option contracts have expiry dates, there's a limited time. Like some expire in a week, some expire in multi-year. So on that day it expires, if the call contract is in the money, meaning the price is $50 and your strike price is $35, it means you get to buy 100 shares at $35 and not $50. So now puts. A put contract is the other way. So say the price is at $30 for this company, and you buy a put at $20. It means you get to own the shares. If the price drops, if the price drops to like $10, it means you have to buy. You get to buy the shares, but you also get to buy. You got also get to sell them at a higher price of $20. So what we train here, like sometimes we do take assignment. That is called assignment when you have to buy the shares. And most of us don't. So what we do with options trading is we just trade the contracts between each other. So let me go to, this is what we use. We use a platform called Tastyworks. So for example, this is Tesla, and I'm looking at May, 15 days out, and the price of Tesla is $571. So if you think this thing is going up in 15 days, you could buy this contract, and that gives you the right at the end of the contract to own those shares at 580, even if it goes to $600. But as the price of Tesla goes up, the value of these contracts go up. Meaning you don't have to wait till the end of the contract. You can just sell it to someone else. So, and you can do that. I don't have a position, so I can't do that here. like if I was to close this position I'm in right now, I could just sell right here. But I wouldn't sell this because this would be a loss. Okay, so actually, let me go to Robinhood's interface real quick because I do have a prettier interface. It's easier to kind of see. So here's Tesla. Like I said, we can go to, let's go to June 18th. And then the price is 573 and we're bullish on Tesla. So you buy it at 580. So here, this contract is $42.83. But we have to remember that this is times 100. So the actual price is 42.83 times 100. So this is actually $4,283 for one contract. And some important numbers to know is you want to see high open interest and high volume. So that means there's a lot of liquidity here and you can get in and out. So let's go to a cheaper one, right? So let's go to NEO. So NEO is a $30 stock. And let's go also to June 18th, 1 month out. So we're at $31 and we're bullish on NEO. So here you could buy this call contract and it's 57 cents. So again, we take 57 cents times 100 because every contract represents 100 shares. So this is $57 for this contract. So what would happen if NEO went to like $40, right? Well, so that's just basically a $10 move from here. So if we look at like this is 57 cents, and say it went into the money, meaning the price of NEO went to $40. Well, let's just go to see how much the $20 is worth. So down here, see the value of this contract is a lot more, right? So this is $11.78 times 100. So this is $1,000. So so with options, but when you're on the buy side, you're buying calls. There's some risks because you're making a bet that the stock has to get to this price. If it doesn't, you can lose everything or lose money. If it does, however, you just spent $57 to make $1,000 on this contract. So that's buying a call, and then it's basically the same thing with a put. Or here, let me just go back to here. Let's go to NEO again. So this is what we use. This is Tastyworks. It's a much better platform actually. So Tastyworks, let's go to June 18th. And you're bearish on NEO. So you buy this $25 put. And the price goes to like, I don't know, 45. So like, I mean, drops like $20. So if we go $20 up from here, see, then this put will be $1,400, and you bought it for 83. So that's but it has to move in that direction, and it has to move there with in good time. Like it can't move on the last day. It's got to start moving there along the way. Like if it's a month from now, you want price action to move upwards in order to kind of capture that kind of value. So that's what we do here. So you and then we sell these contracts to other traders. And that's it. Let me go to example of a call option I did with NEO. So, I did a trade last year in NEO, and I remember watching NEO, and there's some technical analysis, but that's a different class. So I noticed like this kind of bullish progressing pattern here. So I remember, oh yeah, around here is when I started taking my position, around $20, because I noticed like, okay, there's some energy building up in NEO. So let me go ahead and buy a call option. So this is end of September, early October. The price is $20 in NEO. So, and I did some research on Neo, and like there's a lot of bullish news coming out of China, and people are starting to talk about Neo. So I went out like 5 months to January, and I bought the January, I believe 15th, $25 strike. So that was a, that's far away. So I got several months of time, plenty of time, but also it wasn't that far out above the money. So let me find out where 25 is on here. Here we go. Okay. Yeah. So this is where my strike price was, and then January 15th, right here, was okay. Let me get rid of this other stuff here. This is tradingview.com, by the way. I highly recommend this if you're going to get into trading, because you want to be able to read a chart. So this is January 15th, $25 call strike. So this, and I bought this. It's important to know when I bought it. I bought it here. So let me put this here. Purchased here. So what happened was, other people started realizing that then there was this general EV boom, right? Because Tesla did amazing earlier in the year, and then everyone else is trying to capture what's the next Tesla, and everyone's looking at China because China is like is making spending so much money on green energy, and they're pushing their EVs like very hard in China, and NIO is one of their popular ones with battery swap technology and whatnot. But anyways, so this is where I did my research. I purchased here, and this is my strike. So what happened was NIO exploded. Um, so basically, I had a 5 times return on my money invested here. So I sold around like 50 something dollars. I think I sold around $50 or 55 maybe. So yeah, from 55 minus 20, so that would just be like $35 per share if I bought the shares, or like a 50% move basically, or over 50% move. But this 5x my money, so I had $12,000 in this trade, and it turned into 60,000 at the end of the trade. So that's the power of call options. But this was the ideal thing that happened, right? This worked out great, because this is exactly what you want to see if you buy a call option. um, Now, and it goes in that direction. And I was pretty conservative, right? Like I did only like $5 above the money, which is pretty conservative. I could have tried, gambling at 40 over here, which would have made me more money. But it would have to really move up a lot. So this is a lot of strength in a few months. So that was my trade on Tesla. I mean, on Neo. And I'm in a trade right now in Coinbase. And here, let me.
I got a quick question.
Yeah.
How long are you old? Or how long are you able to hold on that option?
Oh, on the Neo option.
Yeah.
Oh, yes. So I can hold it all the way till January.
Oh, okay.
Yeah.
So is there like a time frame?
Yep. You have to do something with the contract. You either have to sell it before January 15th, or if it is January 15th, you only have two options. If it's in the money, actually, let's start with out of the money. If it's out of the money, if this is $25 and all of a sudden it's 18, you lose everything. The contract is worthless.
Right.
If it's in the money, you have two options. You can take ownership of the shares. So that means you have to buy 100 shares at $25. The other option is you don't do anything, which would be kind of dumb, because you just wasted money on these call options, and you're not going to do
Right.
anything with the shares. So yeah, so those are your options. But yeah, you have this whole window to do anything. This was 73, oh no, 106 days for me to do something with this contract. So the longer out your contract, the less risk you take, because you have more time to get there, right? The shorter your contract, like if I only did this for a month, um, that those contracts are cheaper because there's more risk. There's more risk to me because I have less time for my option to get there. So that this is buying options, and this is what most people in the market are doing right now because it's a very bullish market because mainly the Federal Reserve has been printing a lot of money, and when a lot of money goes into the system, or smart money as they call them, buy stocks because inflation is going to go up, so your cash is going to get more worthless, but your assets are going to be worth more money, more valuable. So most of that money ends up going into stocks. So that's why 2020, we had such a crazy bullish year after the COVID drop. And this year, like a lot of people are still expecting the market to continue going for a while. After this May sell off, basically. Um, so you can kind of think of being on the buying side as almost similar to gambling because you're taking a higher risk. Um, we call it calculator risk. So let's talk about selling options now. So for example, so this return on Neo is a 5x return, right? That's five times your money. On Coinbase, if this goes the direction I think it will, I mean, I could 10x my money if it gets there, or 5x, or like just 2x. So that's the kind of like uh, reward we're going for when we buy options, either calls or puts. And mostly we deal with buying calls if we're on the buy side. Puts, usually if you're that's more rarely done, but if something happens, something drops, or you think a drop is coming based on fundamentals or news or technicals, it could be good to buy a put short term, because usually crashes, unless it's like a major recession, crashes don't last that long, but bullish movements last much longer. I did buy a put on Nikola last year, and I closed it after a week, just because I heard the bad news about him. So let's get into selling options now. Let me. So selling options, basically, let's stick with Neo, and let's say we're bullish on Neo. So we're going to go to 36 days out, or basically 1 month out. So if we're just there's so many strategies in selling options. There's only one thing in buying side, right? You just buy it and you sell it. But when you sell options, you can do something like selling a put right here, January 18th, 36 days out at 25. It's 31, meaning you're going to get paid $81. Basically, the mid. So there's this bid column and ask column. Bid is the highest buy price, and ask is the lowest sell price. So the price you're going to probably buy this thing is in between both of these, and that's 81 cents or $81. So here, this will lock up $2,421. Um, but and if Neo winds up greater than $24.21, you get to make $79 in a month. Or if it drops below $24.21, you don't lose this. It just means you have to buy Neo at that price. And we can increase the contracts, right? We can sell 10 contracts. So that's $790 in 30 days, but you have more money locked up. And so this is, what is this? This is 790 divided by 24210. So this is a 3% return on your investment. But what's good about this is you have time on your side, meaning like the buyer is hoping, or the buyer of this put is hoping that the price drops down to here. The price could go sideways, the price could go up, or price could get close. and as long as it doesn't like breach this line, you're gonna collect your money. So it's a more passive style of investing, and you collect little gains here and there. Um, Now here's the thing: what happens if the price does drop below 25? Right. So this you can do something called rolling it out, meaning you can close this position, like you can click this, and you can buy it back. Now you can buy it back at a loss, and then immediately go out one more month to July and sell the next one down. So see how these are more expensive here. So you can collect, you get your money back and plus more when you roll it out. Does that make sense? Or does anyone have a question so far? Here, let me show what the power of the sell side though. You do need a bigger portfolio if you want to make decent sized gains on the sell side. That's why most people start on the buy side to build up their capital and then get into the sell side, which is what I'm doing. So with Tesla, here's a contract that is May 28 or 15 days out, and I'm going to sell two contracts. They're at the money. So right now Tesla is 571, and this is I'm selling two puts for 565. So what does that mean? So that means first I have to lock up $107,000, because if Tesla drops to $536, it means I have to buy the shares at that price, which is fine because that's cheaper than where it is now, right? So it's this is the price minus the premium. And this green number right here is $5,740 that you're going to get paid in 2 weeks, as long as Tesla is greater than $536.30. So, if we're bullish on Tesla and we don't think Tesla's going to drop that low, that's good. But the strategy I'm about to show you is called spinning the wheel. So this is basically a $5,700 paycheck every 2 weeks, and you keep doing this. You every time it comes around 2 weeks again, you sell the same put again, like $5 away from the money, or $10 away from the money. Like here, we can go down to here. This is still $5,300, right? So and you just keep making that money every 2 weeks. Now there'll eventually be a time when the price of Tesla does drop this low, and that means you have to buy the shares. But that again, that's fine, because not only did you get paid $5,000 for waiting, but you also got to buy Tesla cheaper, at this price, right? So now you own 200 shares of Tesla. So what do you do now with those 200 shares? You immediately go over here, and you sell two covered calls at 577, meaning in 2 weeks you're going to collect $5,700 again. So again, you're getting the same, roughly the same paycheck, or 5,700. And you keep doing that. You keep selling this every 2 weeks, as long as the price stays below that, you just keep collecting that money. Now what happens if the price does hit this price, right? Not only do you collect the money, but you also get to sell Tesla at $606. So it's a win-win again, because you get money from the premium and you get profit because you bought the shares for, let's see, these would cost 660,000, I don't know, 120,000, and you bought them from like 106,000 over here, right? So you're making money, and you can start with just one contract. So one contract would lock up 53,000, and that's a paycheck of 2,800. And you just keep doing that, right? You keep selling this, if you get assigned the shares, you immediately go here and you sell a covered call. You can only sell one per 100 shares you own, and you keep selling it. You keep selling it until it triggers, and then you have cash, and then you go back to here and you sell the put. So it's just back and forth, like rinse and repeat. Um, and that's what most big option traders do. Like they basically trade the wheel, but they do it on like stuff like SPY, because SPY barely moves. That's why they do it here, but they sell a lot. So it's like, see here, it's like you have to lock up $400,000 just to make 6K. With Tesla, because Tesla is so volatile, the premiums are more expensive. That's why I like doing this on Tesla. Um, so again, Tesla, if we sell 3 contracts, see that's eight. You get $8,000, and you're only locking up 160,000. Now, we can go in. Now let's talk about a different strategy, right? That's just one strategy of hundreds of different strategies. Another strategy. Let's say you don't have $100,000, right? Let's say let's do something else. So let's just do something called a put spread. So you can do something like this where you sell a put, but then right behind it, you also buy a put as insurance. So this capture losses. So here you're risking $295 to make $205, right? So that's amazing return. What is that? That's 205 divided by 295. That's a 69% return on investment. And we can up this, right? So let's up this to 10. So here you're risking. Oh, let's try get it to 5,000. So what would that be? 15. Oh, here. This is a $3,000 paycheck basically. So you're locked with a put vertical. You're locking up $4,000 on Tesla to make $3,000, and you can also do it on the call side.
Wait, hold on, Leon.
Yeah.
So in order to do this strategy, you must already own 100 shares of Tesla, right?
No, not this. This is called a vertical. You don't have to own the shares.
So if somebody had $5,000 right now, they could do this strategy right here, which is to sell a put,
Yep.
and then buy a put right behind it.
Yep, exactly. So let me go to $5,000 right now. So yeah, right here. So this is within $5,000. Yeah, you could do this right now. So this is, and as long as the price of Tesla stays above 565, you get to keep that money. Now, so obviously, what happens if the price goes past 565, right? It keeps going down. Again, you do this, you can cut your losses, right? You buy them back. Well, you buy back the put that you're selling, and you sell the put that you bought. And there's a feature in Tastyworks where you can close the position at the same time. So you will take a loss on that, but that's fine, right? It's going down. So what you do is you just go out another 30 days or 15 days out, right? Which will be here. And see, now you do the same thing here. So we did 15, right? So here you see it's you get the money back basically. So you do take a loss on the other one, but you push it out further, right? And let's say it's 565. Let's say you do it down lower, right? And let's say the price keeps going down. You can also you take a small loss again and you push it out again. Like eventually the price is going to stop going down, right? And then that's when you're making money. And it'll be the premiums will be high, so you'll be close to what you were trying to get. So that's the flexibility on the sell side, because if I bought a put, my only option is I have to sell that put or convert it into some kind of sell side strategy. This is a sell side strategy, meaning like, okay, the price went in the direction I did not want it to go. I can actually do something to manage that trade. I can take a little loss now, but then I can make it back up in another 15, in another 30 days. So there's flexibility there. And here, I'll show you some other strategies real quick while we have some time still. Let's see here. This is called an iron condor. So there are 4 legs in this trade, and meaning as long as the price. So right here, I'm risking $95 um, to make $405, but the price of Tesla has to stay between 545 and 595 in 36 days. And you can make, you can make you improve your odds if you make the wings a little bit bigger here. But then that raises your the capital you have to put up at risk, and this is the money that you can win, right? So you're risking $137 to make $363, which is yeah. So that's a 2.6x return. Yeah.
So where does the premium come from? Is the premium like a reward for selling the put, or
Yeah. That's a great question. So yeah, these premiums are basically priced by the market makers. Um, so their job is to create the market. So they own tons of shares and they have a lot of money. And these are mostly like algorithmically, programmatically made, automatically set. So you can go in here and you're buying or you're selling to a market maker, but also you're also buying and selling from other traders, right? So it's always better to find something with high open interest. So if you see these purple bars here, like the bigger the bar, that's where most people are. So you kind of want to be there, right? Because if you're in something that doesn't have any like any open interest here, then it might be hard getting out at the price you want to get out. But if there's more people, then you have a smaller spread and stuff like that. Here, it's actually easier to show this on Robinhood. So if I go back to, yeah, I'll go back, I'll pull up Neo again. And let's trade options. And let's go to June 18th. So let's go to psychological number, right? $40. Oh, wow. This is a lot of open interest. So there's a lot of people buying this contract that think that Neo is going to get close to $40 in June 18th. And this is actually pretty cheap. This is 57 bucks. But and so that's a lot of open interest, and this is a lot of volume. So 20,254 contracts were bought today on this. Yeah, but yeah, this is crazy. I've never seen it that high actually. Normally I like to see something that's 1,000 or at least at least hundreds, right? Hundreds of contracts that are open interest, meaning it exchanged hands. So I sold a contract and someone else has that contract. That's an open contract. And that counts as one volume. Yeah. So and then there's these Greeks, but that's for a different thing. Delta is like volatility. Gamma is volatility on some other volatility. Or Vega's volatility. Theta is time decay. Rho is this. No one ever pays attention to this. This is interest rate. But theta decay is basically when you're on the sell side, you're the closer you get to expiry, the more theta kicks in and cuts value out of the option. High delta adds value to the option, but again, that'll be for a different class. So let me get back to Tastyworks here.
can you explain a little bit more about the expiration and how that affects the premium and how much money you're going to get on the call and buy side?
Yeah. So this contract expires in 36 days. If I was to buy a call here at 600, this is Tesla. Let me go to a normal. Let's go to Neo. So see here I can buy this contract and this premium right now is $147. So if this goes in the money by June, now it has 36 days to get there, so it's not that much time. If it gets there, if it overshoots $35 before June 18th, this premium is going to go up a lot. So see, it's like the premium over here to 25 is $7. Actually, it is $6.95. So now there's this thing called theta decay that kicks in within 45 days. So if you're like 50 days out, like theta doesn't like hurt your contract that much. But once we get to within 45 days, you see delta is basically this 0.51. Basically means every time the price goes up $1, you're going to make $51 on this contract. Now you also have to add in theta, because theta is a negative number. So you're also minusing 3.26 on that contract. But the closer you come in to the date, so if it's like, like this is 1 day out, so this closes tomorrow, and see the theta is so much higher. This theta is killing this contract value. So that's what it means by, like, when you're on the buy side, you want to be really deep in the money, because when you're deep in the money, you've got high delta, so the theta doesn't hurt the value of your option as much. If you're just at the money or out of the money, and you're getting down to the wire, like you're gonna lose money, because barring some kind of miracle where it just shoots to your correct price, it's gonna lose all its value. That's why you want to cut your loss on that. On the
So
sell side,
can you give me a breakdown on like in the money versus out the money? I'm a little fuzzy. I
yeah.
think everybody here is pretty new. So can you explain that a little bit more?
Yeah, exactly. Great question. So this is NEO. The price of NEO is $31. So if I buy a contract that's $31 or $31.50, that's called $31.50. That's called at the money. $31, you're actually in the money, meaning you bought a contract, a bullish contract, a call at $31, and it's already $31.22. It means you're in the money. That means, like, if this closes tomorrow at $32 or $31.50, you get to buy the contract at 31. Or actually, here, a better example would be if we go out. So if you're in the money, I'll get rid of this guy. The value of your contract, the theta doesn't kill it as much, and you should be making money based on if you bought this low. If you bought this out of the money and you're in the money, you're definitely making money. Out of the money means so the price is $31.22. That means you bought like a $33 call, and you're out of the money, meaning like you need the price of the stock to reach $33. In a good amount of time, in order for you to make money. If the contract expires, like this contract is going to expire tomorrow, this is most likely going to be worthless. It's $11, and it's going to go to zero unless NEO spikes really hard tomorrow and gets to like $34 or something like that.
So if we were to buy so right now NEO's at 31.22. So if we were to buy a call for, let's just say, a week from now, and that call was $35, that would be an out of the money call.
Yes.
And we would hope that the price would move from 31.22 to $35, right? And as we get closer to those 5 days, the amount of profit that we could possibly get decreases.
Yes. It decreases as long as if the price stays the same. or moves down, the value of this contract decreases, and it decreases very fast because you only have a week left. With a week, like you really need something to pump this up super fast and super hard to get up here in order for this to remain to have any value. Now here's the thing: if you're doing something like this is more high risk. You're probably most likely trying to do like a 1 to 2 day trade. Meaning you're not going to try bet that in 8 days this thing's going to go up like $4. You're probably going to hoping that it goes up $1 or $2, and the value of this contract goes up a little bit, and then you sell it to someone else. So
I
that's
got
kind
a question.
it's like day trading almost. Yep. Go ahead.
So what if you buy a call, right? And the price never gets to the call, the strike price that you set the call for.
Okay.
Like as it gets closer to that strike price, like what is happening to your money I guess if it hits it and if it succeeds and if it doesn't hit it.
Oh, yeah. So if the price is advancing, like if the price is heading up towards this $35 call, that's good for you because that means you're making money. If it's at the money, I mean you're making more money, and if it's over, like if it overshoots, you're making even more money, and it just keeps compounding, right? Like how far deep in the money it goes. Like see this one right here is sorry, let me get rid of that. The $23 call is $8.65 because it's really deep in the money. It's $10 plus deep in the money. So this is $800. But if you bought it for 50 cents and it moved in that deep, that's where you can make some really good gains. But that's a lot of you have to hope it gets there, or you're good at technical analysis and you see a reason why you would do something like that. So yeah, so if you're doing it safe though, it costs more, but you buy something that's right here, right? You buy the 31.50, and you're just hoping it goes up $2, and then it goes in the money, and you make a little bit, you make $100 or something like that. That's a safe. If you're way up here, that's more risky, but as it goes in the money, you're gonna make a lot more money. So that's buy side stuff. So on sell side stuff though, this is why it's very stressful sometimes on the buy side, because you can have big gains, but you can also have big losses in your portfolio. So on the sell side, for example, let's say I am neutral to bearish on NEO, and this is 8 days out. So I could sell this $35 contract here. I want to get $30 for it in 8 days. And right now, like it's at 31, right? So it's going to take a lot of momentum to push, and basically the price can stop anywhere below this $35 price, and this thing will collect money and the buyer will lose. So when you're selling options, you're kind of like being the house, and if you're buying options, you're kind of like being the gambler. Oh, there's some chat stuff here. Money in versus money. Oh yeah, that's what I'm talking about now. Also, what's cool on Tastyworks? Do you see this orange bar in the middle here? I'm not sure what the math is involved to calculate this, but this is called the expected move. So this is the expected move of where the stock's going to go. So if you're on the sell side, you basically you're pretty safe if you sell something that's like if you're not doing the wheel, because if you spin the wheel, you basically sell at the money, both sides to earn the most money. If you're not doing spin the wheel, if you're just doing a basic sell put and sell call, then you want to sell it like outside of this orange range, or right the last unit in that orange range, because that gives you the most money and less risk. So this one, will give us $48 in 8 days. And of course, again, you can sell like 5 of these, right? If you sell 5 of these, then that's $235. So with the example of NEO, right? If you have 100 shares of NEO, and you want to make some money on it, you can go to the sell side. So it's $31. Actually, let's go to the chart of Neo. Okay, yeah, it looks like Neo is going down. So yeah, you could sell a put. I mean, sell a call, covered call. Actually, you could get a little bold, right? You could sell this covered call at $32, and hopefully your average price is cheaper than 31, meaning you get to collect $111. And Neo, if Neo gets up be higher than $33, you have to sell your shares at $33. But again, you make money with the premium, and you make money with the shares. To the person who owns Neo, what was your average price on Neo?
I was buying Neo at 55. So my average price right now is about $40. I've averaged all the way down to $40, but it was a long-term play. So I was buying it at 55 before the correction.
Gotcha. Okay, so yeah, you probably don't want to sell a cover called that low then. If we sold the 40, it's not going to be much premium. Yeah. So there's a lot of people here. You're going to get $6 for this, or $5. So that's not.
Yeah, it's no fun.
Yeah. Man, where if Mitt was on, he could probably like recommend something to do with those shares. But I mean, you have 60 shares. You could probably do something like selling 60 shares at a loss, and then doing something like, because yeah, looking at the chart of Neo, this is not looking good. This is I mean, it looks like it could get back to 25. So what you could do is you could go and buy like 50 days out or something. You could buy the $25, or they don't even sell the $25. Let's go to June 25th or June 18th. Yeah, you could buy this $20 put, or $25 put, and this is only going to cost you like $81. But if Neo keeps going down, so this is one way to hedge your portfolio, right? So it's by puts. So if your portfolio is going down, you buy puts, and the puts make up money, which you can consider that as lowering your cost average, right? So you make $80 here, or you can buy 10 of these. Yeah, and so that you're risking $830. Or if Neo drops below $24, you can make $24,000. So yeah, you could do something like this, 36 days out, buying that, or because yeah, Neo is not looking good on the chart here.
So question.
Yep.
Yeah, so question, if you realize that your portfolio is going down, it would be more advantageous to buy a put than to make a call.
Yeah, yes. Yeah. If your portfolio is going down, it's much better to buy a put, because you're making money as the market's going down. So that's the beauty of call option. I mean of options. Now a bearish trade with calls is you can sell a covered call, right? You could sell this guy because you're saying Neo is not going to get to $40 in 36 days.
Mm-hmm.
So you get to collect money here too. So you can do it both ways, right? You can sell this guy, and you can buy this guy. And here's what's cool, because you have 160 shares, right? You
Mm-hmm.
sell, you sell one, you're gonna collect $50 on this, and then on this buy guy, let's go ahead and buy 10 of these because we're really bearish. So, ignore infinity. Your loss is not going to be infinity because you have a covered call. Meaning, if it goes up, then you just sell your shares. But again, this here gives you a max profit loss of $24,000. And actually,
Okay, so then
And
so
what
the
strike price? My bad.
$25 put.
36 days out.
Yeah, 36 days out. You could go like, because again with puts, I don't normally am a fan of buying puts too far out, even though, but we can go far out. So let's go to August 25. Let's do the same thing here. So yeah, so you can buy this like a little further out, and it's 23,000, but you lock up more money. And usually unless we're in a really bad bear market or recession, like the downward pressure does not last that long. Like right now it's going on for a couple of weeks now, but eventually it'll rebound. But yeah,
What program do you use to read the charts? Is that also part of Tastyworks that you're looking at the graphs on as far as projections?
no. So the two different apps. So I use tastyworks.com to trade, and this is tradingview.com. So this is the best platform for charting. So if I go in here, the tradingview.com, the people can post their ideas. You can follow me. I post my ideas on here too. But there's a search bar here. So we can go here and we type in Neo, and it's going to pull up this chart. But this is not what you want to click on. You want to click on this button, which is full featured chart. And then you bookmark this. So now in here, it's like this is Neo right now. And I could go here, I can change this to ARC. And you'll pull up the ARC chart. Everything's going down, by the way. So if I here, let me go to SPY. This is S&P 500. The S&P 500 took a huge dump, but it looks like it's slowly trying to recover. We can go to the QQQ, which is the technology index. Oh yeah, that's getting that took a big dump. So everything in the market is going down right now. Square is going down. So it's just a big sell-off because a lot of sell-offs happen in May. Tax season, or just people saving cash for the summer. No, Square is not looking good. If this breaks, like it get down to 150s. But yeah, let's go back to Neo. But yeah, this is tradingview.com, and I do technical analysis.
Put yourself on mute.
Oh, I'm sorry.
I do technical analysis, and I find it really helps when I trade. Now, if you're on the sell side, what's cool about being on the sell side is you can just use this indicator, right? You just look at the numbers, right? It's unlikely to go that far up or down, and you just sell up here, right? You sell here, or you sell here, right? Again, unless you're doing spinning the wheel, then if you spin the wheel, then you just do it right here. So on the selling, it's a lot easier to do selling without technical analysis. If you're buying, you definitely need to understand technical analysis, because like if I look at Neo right now, this looks like it's going to break down. It's going to break down into the mid 20s. This doesn't look good based on the.
Yeah, I might take your advice on that put on Neo.
Yeah. This is not looking good. Yeah, I would buy put like and also like it was pretty cheap. So if I go to the one that was like 30 days out, 36 days out, like this $25 put right here, I mean it's $80. So and again, let's just do like 5, right?
Is that for June? Was that June 18th, June 21st?
This is June 18th. Yeah.
Okay.
18th. So it's going to cost you $415. But if Neo crashes into the mid 20s, again, it doesn't have to get to $24 or $25. You could get to $26 or $27, right? And you're still going to make you're going to still make a lot of money, like possibly even $10,000 on this trade. So yeah, I mean, like I don't think I have it. I guess I could deposit some money, and I might look at a Neo put actually, because this is not looking good. And let me go back to Square.
So based off of your experience, when does the market usually like start recovering? Because I know March is usually just like sell off. So like, when do you usually see recoveries as far as everything coming back up? Because I mean, everything is in the downward motion right now.
Yeah. So historically, I mean, it might not repeat exactly, but historically, it's end of May or into June. That's when the recovery happens. Um, and yeah, that's basically what most people are thinking at the moment. If there's another stimulus package that can help pump up the market again. But again, the more money is printed, I mean, the more like
Inflation.
inflation, cash, and is better it's good to buy some Bitcoin because that's deflationary. Yeah, Square is not looking good. I might buy a put in Square too. And actually, I should have been buying puts at the start of May when Frank in our channel was talking about the sell in May, because the perfect time right here. Yeah, where's May? Oh no, May just started right here, May 1st. Oh yeah, if you bought a put right here and on Square, oh my goodness, so much money to be made. But I don't trade puts that often. But yeah. So puts are a great way to if your portfolio is bleeding, it's a great way to make up some extra capital, kind of offset that loss.
Okay, so with the example that you gave on Neo, because Neo is going down right now, and you have the ability to sell, you would sell a call, but you would buy a put.
Yeah. It might even be worth it to sell that call because it's only going to give you $50. But you could sell the call right here, right? At $43 because that's the last resistance, right? Because it's unlikely. Let's see, June 18th is right here. So this is why this chart is so good, because you want to visually see, where you're aiming for. So let's say you want to sell, I'll just put it here, June 18th, covered call, and it's going to get you $50, right? So I mean, and you said because your average price is 40, you would have to sell it here, and that actually might not even be $40. It might be way less than that. And then you buy puts though. You buy puts at 25. So these puts will make you way more money. If Neo continues to break. So, I mean, to me, this looks like this thing could break down. Now it could do something like come back to here and then go back to here and then break down, or but yeah, this is what it's looking like is going to happen. What is more likely, right? It could always go back to here, break up, come back down, and then take off. But like with everything else dumping,
Yeah, I don't see that happening right now.
yeah,
Not in this bear market. Not within the next month anyway, for sure.
yeah, exactly. Like these other two options are way more likely. So yeah, puts in this scenario would be yeah, ideal. I might buy a put tomorrow. I haven't bought puts in so long, so I might buy just a few. And I haven't been following Neo. I don't know anything about their news or anything like that. I'm just telling
And
them.
also, leads me to another question. Since I already have like 160 shares of Neo, whenever I do make that put option, I can just sell the positions that I'm actually in, right? I mean, make the puts on the positions that I'm actually in already without having to add funds, of course.
Yeah, because you're buying a put. So you're buying a put, and you're not selling a. I mean, you are selling a covered call. Oh, actually, let me take this out. So we're just talking about the put. You don't have to buy shares. You don't have to buy anything new.
Okay. Yeah. Can I chip in here?
Yeah.
My wife is here. She has a lot of shares in Arrow. How many do you have?
Arrow.
She has
AYRO.
she has about 800 shares in Arrow.
Is it this company, Arrow? What's the ticker?
The ticker is
AI
AYRO. AYRO.
AYRO. Okay. Okay, she has 800 shares in this. Okay, so this is it's a $3. Ooh, this is not oh. This is not something I would have bought shares in. Oh, wait, when did she buy?
Oh, about 4 months ago.
4 months ago? Oh, yeah, this is okay. I'm looking at this chart. This is, oh my goodness. Jesus, what the heck was this thing? This thing was in the like $40,000 at one point. Holy crap. Oh my God.
Yeah, the spec market got smashed.
Yeah, this is, oh my goodness. Okay, so okay, 4 months ago though, like this is basically flatline and dead. But let me go in. Let me go look what you can do, right? So you have 800 shares. Let's see here. 800 shares 4 months ago. Okay, let's just go to Aro.
Let's say she bought it.
Oh,
Well, she bought it in February.
in February. Okay, so February. Oh, dang. So it spiked up and now it's back down. So you look. Oh, looks like you bought it at $8. Yeah, just based on this historical thing, I would not invest in this. I have no idea what they do, but just looking at this chart, this is terrible. I would not touch this asset. That's why it's good to look at to understand technicals. But anyway, so you have 800 shares. Let's see what you can do because, oh man, let's go out like 64 days. Man, there is either sell 8 of these. Oh my goodness. Yeah, you can't do much at all with this thing. Like you're not gonna get any. Okay, can I give a recommendation? If this was me, I would sell. I would take a loss on this. This thing is not coming back. This thing. Let me go to the monthly chart. Look at this. This thing is a terrible company. Whatever this is, like, it's just. And there's a lot of buying recently though. Like looks like July last year it pumped, and December last year there's a lot of buying. Yeah, I would take a loss on this and then use that money to buy like a Coinbase call option or a Neo put or Neo call option further out. Let's see, 800 shares times. Yeah, so that's $3,000. You could buy a Coinbase call option. I mean, you could buy the one I'm in. The one I'm in is let's see, what is this? $9.45, so $945. And in my opinion, that call will make up for your losses in RO.
So she needs to sell it.
That's what I would do. Yeah. Yeah, because I'm looking at this at what you can do on the sell side. The calls are so cheap. Here, let's go with this one, right? See, if I go all the way to January 2023, this is only $1.75. That's nothing for a leap contract. That's $1,200 in 3 years. That's not even worth it. Let's see here. Let's go to December of this year. So December of this year. So yeah, look at that. This is $400 you can make selling a call on it. And this thing could go further down, right? You could go to $1. So I would cut your losses on this and then move it into a trade on Neo or a trade on Coinbase. And I'm bullish on Coinbase medium to long term. I'm bearish on Neo short to medium, but it might recover in the medium term. Yeah.
Okay. Another question.
Yep.
Yes. How much you have in CleanSpark? Quating.
What's that?
Quating. How
Yeah,
much do you have in CleanSpark?
CleanSpark, I have like 2,000. I'm holding on to CleanSpark though. I don't want to. I'm not taking a loss on that or selling.
Okay, so let's see. Let me look at my CleanSpark and then see what I can do about it. My CleanSpark.
The ticker he's talking about is CLSK. It's a Bitcoin mining company.
CLSK.
Yeah.
Well, okay, let me see.
Okay, what's your average price on this?
My average price in Queens Park is let me see, CLSK. 1 second. Is 25.
Oof. Okay, so
25.42.
25.42. Okay, so
Mhm.
Clean Spark. Here's a good thing about crypto companies. So they have high beta to crypto, meaning if crypto pumps, they pump harder. If crypto dumps, they dump harder. So crypto dumped recently. So the crypto based companies are going to lose way more value than the cryptos. But if crypto is doing well, these companies are going to do really, really good. So, and I expect a crypto summer bull market to continue, like in end of this month into June. So let's see. You have 2,000 shares. You said
No, I have just 75 shares.
you have how many? 500?
75, 75.
Oh, 70. Oh, yeah. Okay. 75.
Yeah, I'm the one that I have a lot of shares in Clean Spark. Well, not really. Let me see. I got about the same amount. About 1,000 in it.
Yeah. So Clean Spark. I mean, are you? I mean, you're probably bullish on this, right?
Yeah,
So
I'm very bullish on Clean Spark because it's Bitcoin mining but it's also it doesn't use fossil fuels to mine your Bitcoin.
yeah.
So
Okay. As long as they can sustain that, right? So let's go look at September. Let's go look at September. Because I don't think there's much you can do on the sell side on this. And there's some things you can do, but like, okay, let's just buy a call on this thing, right? So it's $13. You could go out to September. You could buy this $15. So this is only going to cost you like $300. But see, you have infinite gain. I mean, if this thing goes to, if there's a crypto somewhere, and Bitcoin goes to 80, 90,000, these guys could go to $20, right? And if they go to $20, this could be a $400 profit on this contract, right? Because this is where it would be in the money over here.
right.
So you could buy a few, like 5 of these, and so lock up $1,700, and then make a bet. I don't know too much about them, so I wouldn't go too far out. I would just
Right.
buy like right here, right, $15, and 127 days out, and then you're hoping for this thing to go up $5, and this will make you some money. On the sell side, I mean, this is not looking good, obviously, but that's because crypto is not looking good right now, right? So you could go to what's this right here? So $6 and $7 is this last bottom right here. So you could go to June. $7. Yeah, if you sold a put, that's only 15 bucks you can get. If you're bearish on it short term, you only going to get $1.55, $1.60 on this. Yeah, unless you sell a lot of contracts, but let's see, you could sell a lot of covered calls right here. I mean, a lot of put spreads. I mean, call spreads. Sorry. So let's sell 10 of these. Let's see what we can get. So this is a bearish scenario on this. Oh yeah, it's not worth it. Yeah, it looks like the only for me, in my opinion, it would be either buying a call at September or buying a put in actually a put in May, like this put right here, like this $10 or $12.50, or I guess June, 36 days out, you could buy this $10 put for 50 bucks. But yeah. And again, if this thing recovers, because eventually in fact, let's go look at crypto right now. Oh, look at that. Ethereum is already up on the 15-minute. Bitcoin too. Bitcoin is out of the 40s. It's out of the 40s. So I expect Clean Spark to kind of be up a little bit tomorrow. So that's what I'm sensing with Ethereum and Bitcoin's recovery right now. This is good. This is good. This is good for all crypto related companies. Coinbase, Clean Spark. So yeah, looks like I would recommend September at the money call. Cool. Let me see who's hell. Where's everyone? Let's see here. Oh, we got 12 people on here now. Cool. Let's see who's on. Cool. Any other questions so far? That's a lot we covered. So that's why I say I either want to get people into one trade. So I got Will into the same trade I'm in. I think you're still up on that, right? Because you bought at $5.
Now I end up buying some more at a higher price. My average is a little bit higher, but I'm still up.
Gotcha. Yeah.
Okay, question.
Yeah, I think I'm gonna make a.
Yeah. Okay, go ahead.
No, go ahead.
Okay, so question. If you sell, let's say, you make a call.
Yeah.
Say, and then you say, and somebody buys a contract. Let's say somebody buys your contract for Coinbase for let's say 400.
Okay.
All right.
Yeah.
And then maybe it's up to, let's assume it's up to June.
Uh-huh.
And then you see that it's not likely to be getting to the 400. So what can you do with that contract if you've already set a contract?
Yeah, you're selling it, right? Okay, good. Yeah, that's a good question.
What can you do?
Yeah. So let's say wait, let's go to June 18th and 400, right? So there's a lot of people here. So yeah, you're gonna get like $2.15 for this. And let's say it's May, right? It's May and it's already 385, right?
Mm-hmm.
So you can see that it's very possible that in 36 days we're going to hit $400. So what's going to happen is the value of this contract is going to go up, right? So that means you're going to probably do something called rolling it out. Well, there's two things you can. There's a few things you can do. You can you can also buy a call to kind of you can convert this into a different trade, but that's way more advanced. So you can either sell it, take a loss because you're gonna have to buy this back higher, right? Or you sell it here, you take a little loss, and then you go to July, and it's 400. Just sell the 450. Actually, there is no wait. Okay, this is a weekly contract. Let's go to August. And you sell the next one out, which would be 430. So you lose a little bit of money on the 400, but you gain it back on the 430. That's called rolling it out.
So if you realize that,
I think what my dad is also trying to ask is that if you make the contract for 400, because we basically made a call option for Coinbase for September 17th. So we just it needs to just be clarified that before it even gets to 400, you would be in profits if it hits the 380s, correct?
Oh yeah. Oh, okay. You're talking about buying a call. Yeah. Exactly. You'll be making money.
Yeah. So you would already be in profit before it even gets to the 400. So what happens if you pull out before then? I think that's what you're trying to ask, right? Or it doesn't have to hit 400 before you start making profit. You're going to be making profit anywhere above what it was bought for.
Yeah, so you're talking about buying, right? You're buying a call, the one we're in. Yes.
Yeah.
You'll make money. You'll make money. So you sell it. You just sell it to the next buyer because these prices are going to go up. And
so what if maybe like you buy, you realize that you are losing money?
That's the sell side strategy. So we won't talk about sell side right now. The sell side, there's more stuff to kind of think about, but yeah, if you're buying it, if it's 400 and it goes up higher before June or whatever, then yeah, it's going to be valuable. Like the contract is going to go up in price. so you can sell it. Yep. If the price goes the other way, if it goes down to $200, then like yeah, this thing loses all its value. But yeah, that's how it works.
So if you realize that it's losing its value, what do you do?
Yeah, if you're on the buy side, I mean, you really only have one option, or you can also add to your trade, right? You can close your call. Actually, so this is a more advanced thing. So if this is June, right, and you have a call here, you're buying this, right, and you still think you're bullish on June, you can combine this with a May 15-day out put, because it's going down. So you can buy a put at, I don't know, right here, 280, right? So this is like a calendar spread, because I've got a put and a call, but I have two different dates. So I'm bearish short term, but I'm bullish long term. Right? This is probably not the trade I'm going to do, but I'm just saying like the call, I'm bullish long term. That's why this is a call in June, and this is a put in May. So that kind of helps. The put in May, if it's dropping, will offset the losses that your call in June will be taking.
Okay, so let me give you a scenario. Me, for instance, I bought a call for 400 for Coinbase.
Yeah.
I bought two calls, but my average is 1535.
Okay. Well, what date? September?
For September, I think for September 17. September 17.
Yeah.
But right now, the current price is 945.
Yes.
And I've lost about 1,800.
Yes.
No, not 80,000, 180.
Yes.
So
so here's the thing, like you're copying my trade, right? So before you buy something, you have to know why you're buying it. But I'm buying this because I believe that Coinbase will be $500 this summer,
okay,
or more, right? So that's why I'm holding it. So this here's my trade right here. I was actually down 80% last week.
okay.
Like I was down a lot of money. I was down so much money, I had to turn this column off, so I didn't see how much money I was down. But on Monday, I doubled up, and this is when William bought with me. So I bought like $12,000 more into this, and so I'm not at a loss of 80% anymore. In fact, I was almost broke even. But then Coinbase dropped again going into earnings. And that's fine. I have conviction in this. That's why I'm holding on to this contract.
Okay.
So
All right.
yeah, you have to. So there's high conviction, medium conviction, and low conviction, right?
Uh-huh.
If you're trading something and it's going against you, if you're low conviction, you want to drop that immediately. If you're high conviction, it means you want to hold that. I mean, you expect this stock to go in whatever direction based on whatever analysis you've done. So that's why you hold longer. And also you have to be okay being down, like 100% of your money, right? You're never going to lose 100% of your money, but like the money you put in. So you started with $1,000, you have to be okay losing that $1,000, and over time it becomes 2,000, 3,000, 5,000. So the goal in trading is you want to raise your risk profile, because if your risk profile is higher, that means you're making money, right? Because there are traders out there with millions of dollars of risk of risk tolerance, meaning they're willing to lose $1 million, but that means that they have a lot more than that. So those are two things to kind of keep in mind. It was especially on the buying side. So on the buying side, you're going to see gains that will be really high or really low, and that can cause stress. That could cause stress if you're new to trading. So, that's why it's more risky, but more reward. If you're selling options, it's not going to be like that. It's going to be much more relaxing, but,
Okay.
but less gain, right? Less gain. Yeah. So right now I'm down $36,000 in this trade right now. But I expect this to recover and double. So.
Okay, thank you. I get it.
By the way, and here's this chart right here. I don't know if you can see it, but right above the price, there's this red bar, right? So if this thing, if you look on the right, there's selected price and selected value. So selected price is 548 over here. So if I'm on the green, right? If this thing gets to $500 by the time my contract expires, so September 17th, there's $500. Then this is a $379,000 position. So let's do this real quick. So 379. So that's a 379% return on investment. Now, if this thing goes to $600, and this is cool because this thing will tell me what it'll be, right? So the max right now is if I go to 757, if it goes to $757 by September 17th, this is a $709,000 position. So that would be 709. Yeah, this is basically a 800% return. But I'm making a big bet, so yep. So that's how you make money on the buy side is you take calculated risk, or I mean you can do stuff like day trading, like short-term swing weekly trades, and scalping a little bit of money, right? I have a friend who he just trades very short term. So he'll buy a contract in the start of the day and you sell the contract at the end of the day. And he's not collecting the entire gain. He's just collecting like, $100 here, $50 there. But you need $25,000 in your account to do that. So because as long as you have $25,000 in your account, you can do as many day trades as you can. But if you have less than that, most brokers won't let you do that, which is so stupid. I don't know why that's a rule. It's
Yeah.
so
So question:
yeah.
If you have $25,000 in your account, does it include your investments or just a free cash?
No, it includes your investments, but the problem is your investments could go down, right? So that as soon as it goes below 25,000, then you have like 4 trades you can do before your account's locked. So
Really?
yeah. Now this is how you make money on this big money on the sell side. So I'm going to show my mom how to do this. So my mom has 10,000. I mean, no, she has 1,000 shares of Tesla. So I'm almost sure how to spin the wheel on Tesla with 10,000 shares, right? I mean, sorry, 1,000 shares. So if she sells 10, right? So see, that means $28,000 in 2 weeks. And same over here. If she buys the share, she immediately turns around and sells the covered calls. Again, $28,000. And you don't even need that much, right? I can tell her, hey, just sell 5. Like $14,000 every 2 weeks. That's actually not bad in her. But she has to convert that from her retirement account into a taxable account. So that's $250,000 locked up, but that makes you 14,000 every 2 weeks. So that's how you make money on the sell side, but you need a lot of money, right? You need a lot of money. That's the only caveat. On the buy side, you don't need that much money, but there's so much more risk. So yeah, that's where I'm at now. My goal is like if I end up with mid to high 6 figures on this trade in Coinbase, that's it. I'm going into trading. Like all I need is like 2 contracts, and I'm happy with $5,700 every 2 weeks. I mean that's fine, right? If I want a little bit more play money, 8,600 every 2 weeks, and that's 160,000 that I need locked up. But yeah. So
Leon.
Yep.
I kind of want to get a better understanding of what my dad was asking earlier. So he and my brother are in the same cause that we're in. So
Yeah.
the question he was asking is, say we're getting closer to September 17th, say it's September 1st, and
Okay.
we see that the trade is losing money. What can we do at that point in time to get out of that trade and not lose the entire position?
Okay, so it depends on what it's doing, right? So if the trade is losing money, that means we're still like in the $300 range by then. I think that's highly unlikely for Coinbase, but let's say it's happening, right? I mean, if you're on the buy side, again, you don't have much options. You have the option of taking the loss or waiting it out, hoping it recovers. Or the other thing is if it's really dropping a lot, or on the technicals like on Neo, right? The Neo looks like really bad. Like it looks like it's gonna break down like tomorrow. You could buy a put in addition to your calls. So your put will offset your losses, but then you're still hoping that your call recovers in time, right? If your call doesn't recover, you're still going to lose a lot of money, but at least the put made you a little bit of money, right? So it kind of offsets the loss a little bit. But you,
Okay, so
yeah,
I'm sorry, if you're in a losing position, so you bought a call, and instead of it being a call, it ends up going down. You can buy a put, and then the money from buying that put will then offset some of the losses from the
exactly.
call. Okay.
Yes, exactly. Yeah. If your position is going down, or like I should have bought puts in May for this month. I didn't know why I didn't. But anyways, um, yeah. That's the way that's how you hedge your position. Like if you're in a bullish position and you expect short term volatility, that's why you usually buy puts that are like not that far out or not too long, or you don't hold them that long. But you want to there's going to be some pain, and people who only have shares, they're going to feel that pain. But hey, okay, you're going to feel a little bit less pain because that put's going to make you a lot of money. So yeah, you can do that.
Sorry, if you buy the put, say you bought the put, you bought the put for say let's say 25,
Mhm.
and the thing the price stays as 30 at the end of your contract period. What happens?
Then you lose the money of the put. So normally, again, when you're trading options, most 90%, 99% of the time, you don't want to hold all the way till it expires. You want to trade, you want to sell that contract before it expires. Ideally, unless you're deep in the money, if you're deep in the money, you can sell it like a week out. If you're not that deep in the money, like you're in the money or you're getting towards the money, like you probably want to take profit before 45, 30 days.
Uh,
Does that make sense? Yeah, because if you're on the buy side and you wait till it expires, that the value of that contract is going to drop to zero, unless you're deep in the money. And
okay.
again, on the day it expires, you have to sell it during market hours. Otherwise, at the end of the market, like either you're going to be assigned shares, meaning you need the cash to buy these shares, or it's a covered call and your shares get sold. It's something like that. Well, no, yeah. Or you have to buy the shares. Yeah, actually, if you're on a buy side, you have to buy the shares. So, or I mean,
If
you option on the call, but you have to buy if you're on the put. So yeah,
you have to buy from the put
yes,
to
you have to buy on the put. Yeah,
make the difference.
yeah. So your money is locked up on that. Well, I mean, yeah. I
And
mean,
then
sorry.
if you are
Let me take that back real quick. If you're sorry, it's buy call and buy put, right? Like you have the option to buy the shares at the time it expires. You don't have to, but you should have sold it before it expired. Yeah, go ahead.
okay, yeah, I just want to know because if by, let's say, the end of August, you realize that you are not hitting your 400 mark.
Yeah.
Yes, then you can decide to buy a put.
So again, it depends on what the price is doing, right? If the price is going sideways, buying a put's not really going to help you. If it's going sideways, then you just have to accept your loss. You just have to take your loss. If the price is crashing, then it makes sense to buy a put because that can offset your.
So then you have to give yourself at least 30 days once you buy the call.
Yeah. You want hopefully longer than 30 days. I mean, you can buy, in 30 days or within 30 days, but you have to know what you're doing, and there's a reason why you're buying it with such a short time period.
All right.
It's safer the further out you buy it because you have more time on your side.
Yeah, what time to recover?
Yep.
Okay.
Leon, will you be
Thank you.
doing this Thursday nights in general?
No, I don't only do this, but a lot of new people were thinking about joining Profit Makers. So again, with Profit Makers, we charge $100 a month, and what that gets you is a one-on-one with me or Mitt or sometimes with Frank, and we can help manage your trades. Actually, no, you only do one-on-ones with me or Mitt. And right now, Mitt's on vacation, so I'm the only one doing it. So I can help you set up a trade. So I help William. Well, William's doing I gave him like a 1 month trial. I think we're halfway through that. But yeah, so we sit and we help you with trades, and we look at what you're doing, and we help manage it and whatnot. And we have a lot of channels here. So let me pull up our Discord channel. Oh yeah, I gotta go in about 5 minutes here, but let me pull this up.
And do you guys meet every morning on the Discord channel? or is that
Yeah.
just-
Every morning pre-market we stream, right? So right here, there's a lot of private channels, right? So if you're a premium member, you get to come here and join in here and listen to us talk pre-market. And sometimes we jump in the middle of the day and we'll talk market. And then also here, right? You can see these are all private channels, so you can see Mitch trades, what he's doing, and what he's closing. These are his risky trades. So here are his Coinbase trades. He made 11,000 on this, but he might be down on it now. You see Zen is another pro trader. Varun is a pro trader. You see my channel is also in here. So we got a lot of stuff you can come in and read. But also we have a weekly meetup that's every Sunday.
What did you throw?
It's nothing important. It's all right. Just go.
Okay.
You look great.
Thank
What you
you.
gonna do with your hair?
Huh?
What you gonna do
I'm
with your
not going anywhere. Just want to Target.
Mute, Wilson.
Well, do some with your hair. Like put a scarf on or something.
Okay.
Wilson.
Yeah.
I can
Mute.
see-
Oh, hey.
Leon, did you say Sunday is your weekly meet?
Yeah, weekly meetup. It's at 4 o'clock, but actually I need to drive back to Dallas, so I'm gonna tell everyone right now. I want to make it at 1 o'clock. Oh shoot, no, I need to do it at like 10 a.m.
Cool.
Oh,
Okay,
actually,
thank you.
hold on. Let me tell everyone here. I'm gonna do it Saturday. Our weekly meetup will be this Saturday at 4 p.m. So yeah, we have a weekly meetup, and everyone comes on there, and we discuss trades. Usually it's Mitt that goes in and discuss the trades that you talked about during the week. And last time I did it, I talked completely just about Coinbase and buy stuff. But we talk about different things sometimes too. We talk about portfolio construction. We talk about crypto and other things. But cool. I think yeah, I gotta get ready here in a minute. But I hope you guys learned something about options trading and the flexibility with it, right? And how to manage positions and like taking risk on the buy side to make a lot of money. And once you have a lot of money, getting consistent gains on the sell side. And there's so much on the sell side. I showed you guys like 1% of what you can do with the sell side. There's like all kinds of crazy strategies, jade lizard, iron condors, iron flies, which that is straight up gambling. But like there's so much on the sell side. But again, the goal is find out what size portfolio you're okay risking. $5,000, $1,000, you could lose that. You can still eat tomorrow. You'll be fine, right? Start with that. Yeah. Find a company you like. My suggestion is, I mean, you can do sell side stuff with $1,000, $5,000, but I mean, you're not gonna get much money. You find a company that you think you're bullish in, or you trust a friend who's bullish in this company. Find something that's 2, 3, 4, 5, 6 months out. Buy a contract that's at the money, so pretty safe, right? Start pretty safe, and as you get used to this, you can buy a little bit higher out and do more things over time. But yeah, I mean, with this thing, you can literally change your own life, right? Like I made more money than my company's salary last year, and this is what I want to do now. Like I don't want to program anymore. I'm so done with okay, let me see. Okay, I don't think anyone from work is on here, but I want to quit my job this year and just go full-time trading. You just need an hour in the morning, and that's it. Go work out at 11 a.m. Like cook steaks or whatever. Do yoga. And then like so I got my brother who barely trades either. I got him into trading options last year, and he copied me on 3 trades. But I mean, he takes more risk than I do. He just went full YOLO, right? So he started with $8,600, and he stayed in ARK. I sold ARK at a loss. He stayed in it. COVID happened because I got out because COVID happened. He stayed in. He doubled up actually. He sold a Bitcoin, so 16,000, and he made like $30,000 on it. And then he rolled all that money in the Peloton. Then he made $100,000 in Peloton. Then he rolled it all in a Neo. I was in Neo. I put $12,000 in a Neo. He puts $100,000 in Neo and turns it to 250,000. Then he makes $500,000. Then he makes $1 million. Then 2 million at the end of the year. But then he lost $1 million, so he's back at $1 million. But he's doing more. He's doing more safer stuff now. He's doing more like buying multi-year out, deep in the money calls. So that's how you lower risk in the buy side. He still hasn't done sell side stuff yet. I'm like, dude, $1 million. You can make $30,000 every 2 weeks, man, on the sell side, which is so much safer, man. Like, stop taking risks now. There's no reason to take risks like that far up. But anyways, so he's talking about getting into real estate now. I'm like, all right, well, but yeah, and that's why we love doing this, because it's like I got into investing and trading because I discovered Bitcoin back in 2013, and I didn't really fully get it until like 2015, 2016, 2017, right? And I'm on this mission now because it's like everyone is 9 to 5ing themselves, right? And like we always hear about the 1% and the 99%, like that wealth gap is getting bigger and bigger and bigger. It's because of education. Like in a capitalist society, you can't 9 to 5 your way to wealth or retirement, right? Like, well, you work at a corporation for till you're 60, then you retire. Like you're probably not gonna be working at the corporation for 60 years or 40 years, right? So the only way to build wealth in America is 3 ways: is business that you can scale, real estate that you flip, and then liquid assets. And liquid assets, that's what we're doing right now. It's the easiest one. You start with $1, right? Buy a fractional share of Tesla for $1. But with liquid assets, I mean, like the sky's the limit. You can make a lot of money fast, and if you don't know what you're doing, you can lose a lot of money very fast too. But there's conservative stuff you can do. Like you build it up, taking a little bit of risk, and then start allocating your portfolio to like risk capital and not risk capital, and then use that not risk capital to make consistent smaller gains, and then over time that becomes bigger. So yeah, that's what I'm trying to do. I'm trying to get more people, all my friends, into trading crypto and options. And I've been telling people to buy Bitcoin since it was $200. Like no one, like 2 people listened. I wish I listened to myself even more back then. But yeah, like it's funny. Like with crypto, it's like I used to day trade crypto, But now I just multi-year swing it, right? The crypto is like the crypto cycles are so easy to see now. It's just like right now we're in the middle of a bull market. So I don't have to trade. I mean, I could trade Bitcoin, but that's very stressful, right? I mean, you need like 10, 20,000 and you're looking for a 1-2% move just to make $100-200, and you have all that capital at risk, right? If your stop loss doesn't hit. But now I just want to trade options, like just options full time, right? You just need an hour, set up a sell side, like no stress, right? Have a little bit of money, take a little risk because a little bit more fun, and just hold crypto and let that ride. But yeah, I hope you guys like this. Definitely. Oh, let me send a link to our Discord. So
Yeah, for sure. Thanks, Leon. You definitely put us on a lot of game tonight, man. Appreciate it.
yeah, definitely. Here's a link to our Discord channel. So join that. We have a lot of channels that are free, and we got videos on options. So there's like a dozen plus. No, we got 100 videos on options basics, right? But it's just better to get on a one-on-one call because we can just explain how it works, right? But yeah, it's $100 a month for any time, really. You hit us up. Hey, well, help me with my trade. What would you recommend here? Such and such. And then we have this weekly call every weekend. And over time, our goal is we want to grow. We have like 40 subscribers or something like that. And when we get to like 100, 200 people, we'll have more people be able to do one-on-ones. Like we have half the people trade full time here. So we want to get some of them in the profit sharing and then start training other people how to trade, right? And figure out a cut. We're gonna offer a course at some point. But in the meantime, it's just helping you guys out and helping our own trades out. And yeah, let's go make some money. Scared money don't make money. Oh yeah, hold on. This is my favorite song lately. Hold on, I gotta pull this up. Oh, this crypto
Here we go.
face, though. Crypto face made this video. I'll play like 10 seconds.
Damn it!
I'm afraid. All right. You want to hear me say it? You want to break me down? All right, I'm afraid. Scared money don't make no money. A scared man don't make no money. Scared money don't make no money. A scared man don't make no money. Scared money don't make no money. A scared man don't make no money. Scared money don't make no money. A scared man don't make no money. Scared money don't make no money. Don't be scared, make a move. A scared man don't make no money. You ain't got shit to lose. Scared money don't make no money. Go on and put that trade in. A scared man don't make no money. It's time to get paid. You win some, you lose some.
Okay. It's a very short song, but I've been playing that all week. But anyways,
pretty straight to the point.
yeah. All right, I'm gonna stop recording.